everyone, and welcome to Mish's Market Minute. I am your host, Mish Schneider. As always, I like to thank StockCharts TV for giving me this opportunity to be with you each week. So what I want to do today is, considering how the market has melted down this week of March 1st, is there more downside? Well, we're going to take a look at some indicators to determine that. Or is this a buy opportunity, which is kind of what I'm thinking. So basically the narrative is, with the rising yields, the market has tumbled. And we know that really is the reason why the market has tumbled. What will do better with rising yields, and how will we know when to buy? So this is where our handy indicator phases and our handy real motion and leadership and apps that we have, plugins, I should say, really will help us make that determination. So here's what I want to cover with you in terms of the symbols. We're going to go through the indices. We're going to go through the economic modern family, some of what I call the outliers. We're going to look at energy, financials through a different way, solar energy, and then I have a bunch of stocks that I'm watching. One, either to buy, some I'm still already in, which I will disclose when we get there. Some I'm looking to get in. And I end with XLU just because I like to say that when Uncle Utilities shows up at the door drunk, it's time to pay attention. So we'll see how he is doing. So let's start with NASDAQ. Now, if you recall, I have actually talked to you about NASDAQ when I started to see the divergence in the momentum back here in the earlier part of 2021. While this was trying to make new highs, look what the momentum was doing. If you can follow that line down, you'll see that the momentum was actually breaking down under the 50 and the 200-day moving average. If there's any reason why we are doing so well in the market and outperforming, part of it has to be because of these real motion indicators. Because as people were talking about buying Microsoft and Nvidia and Amazon and Apple and all of the stuff that's in the big tech and classic FANG stocks in the NASDAQ space, I was saying, And was it because I'm a genius? No, it's because I was looking at momentum here that you could so easily have on your charts, thanks to StockCharts TV. And it was telling me divergence, warning, warning. The price and something else is maybe coming around the corner at a theater near you soon. That's not going to be so good. And man, oh man, did that turn out to be right. So the bigger picture, though, is what do we do now? So we could see the momentum is going down. Obviously, we're in a caution phase, have been for the last several days. And of course, had you gone short, you may have gotten a little bit chopped up unless you had a good stop. Remember how I like to use recent swing highs. Maybe you would have had a stop over 325 and now you would have been finally at payday. But if you didn't want to go short and you just stayed out, that's good enough. That's kind of what we did. We didn't go short anything. So now the question is, what do we do now? Well, for one, look at the lack of leadership here, really tanking. So let's look back a little bit at the momentum here. At the last time we were down at these levels was back in November. And right now we are actually lower that. So what I probably at least want to see is maybe a little bit of an uptick in momentum to get it back over that 1007 I was just showing you there. And also we'd want to see some level of support. So I would say either here at 300 may be one thing, but you're not going to be able to do this on the basis of a phase change, obviously. So I would do one of two things. Either I would wait to see for the momentum to start improve, and I could use 300 if that has held as a swing low. Or if the momentum doesn't improve, then I would want to see what happens as we get closer, let's say, to 290, 285, because then we can actually use the 200-day moving average as a gauge. So even if this pops up because of some kind of short covering, must see that happen in the momentum as well. IWM has a different situation, although this too started to show a divergence in momentum here after it made new highs. So at least it made its new high first. And now, of course, you can see the momentum has come off and it's also underperforming now in terms of its leadership. However, This is sitting on the 50-day moving average. So again, one or two things are going to happen. Either it's going to break the 50-day moving average, and we're going to see that in the momentum continuing to decline. And then we'll see what happens at our next area of support, which really would be somewhere around 205. And if that happens, then we'd also want to see the momentum come back, or we'd want to see the leadership come back. Or scenario two would be it will hold the 50-day moving average, maybe even chop around a little bit. We'll need to see the momentum, though, coming back a little bit. And if that happens, then you can say at least you've got a risk point underneath this low here at 209.42 as this continues to maybe work its way up over the 50-day moving average. So that's also, to me, even bigger because you can see the Qs have crashed, and of course IWM is dragged down with it. As I've been saying on all of my media appearances, the boards are creaky, and if the carpenter doesn't show up, everything falls. But still, this is so outperforming the NASDAQ. And the Dow looks kind of similar. In fact, look at the Dow in terms of leadership, very much still outperforming. And yet it's now breaking down under the 50-day moving average, and the momentum is breaking down. So it's telling you don't get involved. And again, let's look for the classic signs. Either it holds the 50 and starts to turn back up, and we want to see some kind of movement up in momentum at least. And then, of course, I would be very nimble, only looking at a risk under 305.68. Now let's move on to the modern family. We've already looked at grandpa, so let's look at grandma XRT. This is not even near the 50-day moving average. Now, I will say part of the reason is because of GameStop, which is in here. And GameStop, as I'm doing this video for you, is up 5% with the rest of the market down. In the case of IWM, close to 3%. So that's amazing. And that's why this is holding up. I wouldn't trust one stock, though. I'd rather be looking at the overall momentum, which also is coming down as this is getting closer to the 50. So I'd almost want to see this either get down to the 50, hold, break it, and then come back through, or at the very least, I'd want to see some level of a momentum shift to the positive, because right now you can see that the momentum is telling us that this price may not hold. Next, let's go move on to IBB, which started to show signs of weakness before. This was one of the first ones to break down under the 50. And look, there wasn't even, well, there was already a divergence there. The price was above the 50 as the momentum was breaking down under the 50. You see why this is so important. And at the same time, even before that, it started to lose leadership here, as you can see if you're looking at the middle graph, even while this was still close to the all-time highs. So at this point, we've got one thing going for IBB, and that is the 200-day moving average coming in just another $4 lower. It may or may not get there. So if it consolidates around these levels for a while, what are you going to look for? You're going to look for some kind of upturn in momentum, and then I would risk no more than that 143. So what we're seeing so far is we need to either have some kind of miraculous change in momentum in everything I've shown you so far, or we need to at least see a little bit more of a downturn in the price so that we can actually either break under a 50-day moving average and see it return, or we can start testing these 200-day moving average. So as I'm looking at this with you right now, this certainly doesn't look like a bottom yet. But that doesn't mean that it couldn't happen very quickly, because, you know, one announcement of a stimulus package or an operation twist or a bond buying program or a quantitative easing, although it doesn't look like Powell cares very much about that, could change the whole picture. Now, this is KRE, which of course benefits in a rising yield environment, yet of course with the rest of the market has come off. And it did have a reversal pattern in that it made a new high here, and then the next day close lower. So if we look at that, it needs to make about a $7 move, so around 61. If it gets down to around 61, I'd be more inclined to be a buyer here, especially if the momentum doesn't break down under the 50. If the momentum breaks down under the 50, then I would say all bets are off. So I would look for a move somewhere around 61, 62. Then you can use the 50-day moving average. And again, you don't want to see the momentum, but you can clearly see that this is still showing a lot of leadership. Now, semiconductors, I also showed you as a divergence in momentum at the same time we were looking at Qs. And that was back here when this was breaking down the momentum, even though the price was still there. And then when look what happened, it rallied up, but the momentum never got as high as the momentum here, even though the price did. So once this really broke down here, so close to the highs, you had a really good opportunity to go short against the high. Now, what are we looking at? The momentum is really cracked down below the 200-day moving average, where the 200 moving day average is all the way here. So to me, this really needs to, I don't know, reset at some level, and maybe even the move is over for semiconductors for a long time. That's very possible because this was one of the first areas to go up back in 2012 when the market started to move up. Semiconductors really led the charge along with technology. So it's possible that after 9 years, this thing is just tired and can drop all the way close to that 200-day moving average. I would definitely not be looking to put my money here right now. I'd rather be banking on something like IYT or IWM or even XRT, which is more in line with a potential economic recovery with the economy starting to open up. So let's look at IYT. IYT, up until this day I'm talking to you, was actually holding near the all-time high. So now it's come off, which means, will it hold the 50-day moving average? Well, it certainly has leadership here, yet it broke the 50-day moving average here in momentum. So again, I would either be looking for this to come off even more, or if it can hold here, some kind of price pattern holding around these levels, can this momentum hold this Bollinger Band and move back up over the 50? If it does, and we still have a relatively good risk against the 50, then I would be more inclined to say the transportation stocks are still not a bad place to be. Certainly look a lot better than semiconductors. So now let's look at what happened here to gold. These are what I consider the outliers. So gold got really hit after Powell's comments on Thursday, making another new multi-month low. We kept looking for some kind of a sign that this bleed was going to stop. I was actually looking for maybe a buy at around 1,500 to 1,600 in gold, which I can't even believe I was thinking that, but I was. And now, actually, this is really not doing that bad. It's underneath the benchmark, but it's not doing that bad in terms of leadership. Of course, the momentum has just been terrible and has been terrible since back here when it broke down under the 50. It broke down under the 200 ages ago. So gold has not been showing us anything in terms of it's ready to be a buy. So of course, we want to, first of all, see some level to hold. And secondly, we want to see some kind of an uptick in momentum. And when I say an uptick at this point, to be very convincing, we'd want to see it take out the 50-day moving average. And we'd like to see it take out the 50-day moving average even before the price does, because then we can actually start looking for some kind of a beginning position long based on the momentum telling us that maybe the worst is over. Now, if we look over to USO, this was the classic divergence in momentum back in the summer where this was starting to clear the 50-day moving average before the price was. Let's go back a little bit here actually to that time when I'm talking about. When this came back over the 50, momentum was in line. And notice how the momentum stayed above the 50 throughout the entire time the price was trading under the 50. So of course, if you just waited to when the momentum actually started moving up a little bit more, really that happened in November. And since November, the oil market has gone straight up. It's still really well outperforming. It's almost bizarre how well it's outperforming compared to the market today. However, new high, not new high in momentum. So if you're first joining the party, I'd be really cautious about getting involved up here. I'd much rather either see the momentum start to blast off or this to have some level, maybe another test at around 4150 level and the momentum holding. And then at least you'd be able to control your risk to under 40. But this is really, to me, very interesting. It's not in an inflationary point at this point, but it is certainly telling you that oil has made a departure for the rest of the market. Those people who say that these relationships are firm and they don't change, and you got to look at this to look at that, that is so has not been this market since 2016. All rules change in this market. So now let's look at junk bonds, because this is something I know I've shown you, that this is where you see risk on. Right now we're going to risk off, obviously. And even though it's continued to outperform, look at that momentum break. It was already starting to tell you that something was rotten in Denmark right in the beginning of in January, middle of January 2021. Momentum was declining. It took a while, but now you can see that the price today, really, or the day I'm talking to you, is now breaking down. Now, if you look at a weekly chart on this, you have some support at 107. So we're going to look at 107 as a place. If 107 holds, again, we need to see a change in momentum here to the positive. If 107 breaks, then we could be looking for a move closer to 105. Would I actually trade junk bonds? No, but I use them as the most reliable information for risk on versus risk off. And right now, risk off is definitely looking like the case here. Now, the dollar, interestingly enough, which had been hammered, now has made this big move up over the last few days. Not surprising, because this has had somewhat of a relationship with Bitcoin, and Bitcoin goes up, dollar goes down. But even that's departed, because Bitcoin, well, it's down to, as I'm talking to you, around 49,000. But nonetheless, this actually has gone up even more than the Bitcoin has gone down. So look at this. Here we had the divergence of momentum, and I definitely pointed this out to you because we talked about this a few weeks ago, how this was flipping positive while the price wasn't, that I wouldn't necessarily buy the dollar, but I would anticipate that the dollar was bottoming. What does that mean? Well, certainly it hasn't been good for gold. Has it affected oil at all? And some of the crops, which are now down on the day as I'm talking to you, but were more up on the day earlier, they're getting impacted to some degree, but looking for fresh news, basically more like weather news. So watch this dollar as well, because this is another thing. A strong dollar doesn't necessarily have to mean a weak market, but it certainly means that in a time where we need people to be doing trade, because our dollar had been weak and making it more attractive, this could actually also have an impact on the economic recovery. Now, next is energy, which, like oil, the energy market has done surprisingly well. And again, look at where we started to see the divergence. Although this was over the 50 at this point, you could see that it really kind of told you that the energy market, except for the brief little break here, you see what I mean? Is that when you break down under the 50, you can either use a return back over the 50 with a tight stop if the momentum hasn't improved, or you can wait for the momentum to improve and then get involved. In this case, it was picture perfect because the momentum improved over the 50-day moving average just when this started to show that it was going to hold the 50-day moving average, still giving you a good risk. Buying it somewhere that day at around 40, 41. And of course, this went up all the way to about 52. So what's happening now? Well, now we had a peak in momentum here. The price is higher, but not the momentum. So now it's telling you, be a little careful, even though it's showing great leadership. Now, this has gone up tremendously compared to alternative energy. But before we get to TAN, let me also show you, besides KRE, the big banks, also same kind of thing as we showed you with KRE. Reversal pattern, could come off more, don't want to see it break the 50. And if we do see it break the 50, I certainly wouldn't be buying it. And of course, this is showing tremendous leadership. So what you want to see before you get involved in this is some price to make sense. Again, using that 10% rule from the reversal, that means we could see a move, let's say under 30. That would be, or around 30. I would love to see this down to around the 50-day moving average. And just like what I showed you with what was it that I just showed you? XLE. We want this to hold the 50 or break the 50, this to break the 50, and then this come back over the 50 as the price is near the 50. That's right now, we're really so far in the middle of nowhere. It's hard to give you any specific trade recommendations. So I'm hoping you're taking notes at least on what to look for. And with TAN, same thing. Momentum, divergence, as this was climbing to new highs, couldn't even clear the 50. Boom, we start to see it break down. And now you can see the momentum really declining here. So once again, what are we looking for? Maybe a move closer to 75, where we can actually use the 200-day moving average, or at the very least, some kind of move, at least back over the 200 in the real motion. And at that point, maybe a move closer to the 50-day moving average. I'm not writing, you know how I like to write down as I talk to you. I'm not writing anything down yet. DDD, now we're going to look at the stocks that I am watching. So you know, super bullish DDD. We got out of some all the way up. We got out of some at 43, and then we sold the balance of it this week, earlier in the week, once it broke down under 30. So let's look at momentum here. At the very least, we'd want to see this momentum get back over the Bollinger Band. We're under the 50 now. Otherwise, maybe if this can get closer to 20 or around these levels, 1950 to 20, I would then be looking for some kind of a consolidation of the price, and then to see maybe we can start to see that momentum. But I definitely have eyes on this, either closer to 2019. I don't think it could get to 15, but you don't know. Obviously, if it breaks 19 to 20, it can. That to me would be like a bargain. With a stop under the 200-day moving average, or we start to see this momentum flip back up and this get back over the 50-day moving average. Not counting on that, but I'm definitely not going to lose my eyes on this. Now, admittedly, we still have a half a position in Scorpion Tankers, but I just wanted to show it to you because the momentum is also obviously no divergence. It made a new high momentum as this made a new high. And then now the momentum is coming down with the price. So we don't see any divergence there at all. However, what this does tell me is after we've had one try, two try, three try, really, at 1750, with the momentum declining and the leadership declining, although still showing leadership, this gets through 1750 and this momentum starts to take out the recent high. This thing is going to continue to go higher. Otherwise, you'd have to wait for some kind of dip. Maybe it's a dip to 15, but this doesn't break the 50-day moving average here on the real motion, and it doesn't break the leadership. Or either that dip to 15, if that breaks, then you're going to be looking at the moving averages, and if it holds and it doesn't get to 15, then you're looking for a move over 1750. Next one is Tilray. Okay, so Tilray just today is breaking the 50-day, well, yesterday really. So it's starting to show some negative momentum as it's still holding the 50-day moving average. So if you're in this position, you kind of have to be out if it breaks down under the 50, because as we know, it can get much nastier if that happens, in which case then we'd be looking maybe at 15 or maybe even lower. But if this goes back over the 50-day moving average, the momentum, in the next couple of days, while this is holding the 50-day moving average, this would be at the top of my list of something to get involved in. We're already in at higher prices. We took lots of profits on this on the big run. But now what we're really looking at here is either getting stopped out on the position that we added, or if it holds, adding again, like I said, looking for that real motion. Now, in the same kind of space of tan is SunPower. And the reason why I'm showing you this one is because even though the momentum is down, I do like the fact that this low was a good established low here at 28.31. So again, want to see momentum improve. Don't care so much about the leadership, and obviously want to see this low hold. If this low can hold, then we would be looking for a move closer to around 20. Do I believe that all these stocks are dead forever? No, but you have to be watching them based on something that makes sense. So it either has to be the price gets back into a better phase, and the momentum isn't too bad, or the momentum shows a divergence starting to outperform the price, and then you wait for some kind of confirmation. But this too on my list. Another one, we did very well. We've been out of this one since before earnings, so we did great on this one. But it interests me. It interests me because even though momentum is down and the price is down, we're getting into some really interesting areas here at around 80. This is where it was in November before it really started taking off. But I got to see a sign. So one, I got to see it stop going down. Two is now we're in a distribution phase because we're under the 200. So I've got to see something here in the momentum. Now we don't even have a 200 here. So I would say at the very least, this has to clear this black line. That's the zero line. If it clears the back line, the zero line, and it's held 80 and it gets back through 90, that would be my area to be looking at to getting involved. The same thing with Teladoc. We did very well in this, and we've been out of this one for a long time as well. We actually sold the last of this one, I think at like 276 this day when it started to crack. But now look at it. So now you've got, again, terrible momentum in a distribution phase, getting closer to some support here around 180. But again, even just a dip to 180 would have to show me two things: that it can at least control the risk by showing some level of consolidation or a move immediately up that day above 180, but also that it has to have some good momentum back over that zero line. So we got three more left here. EFR, which is actually a Canadian stock tied to uranium. Well, what's interesting is this looks great here on the daily and it looks great here in the leadership, but look at your momentum. Momentum is terrible. In fact, it's going down. So what that tells me is this could be an interesting trade if it heads back down closer to the 50-day moving average. And if it does, we'll look at where momentum is. But really what we want to see is the momentum go back over this Bollinger Band here at the very least. Then we might be more inclined to wait for it to not break the 50, but use the 50 as a risk point, because look at that leadership there. So this is kind of high on my list right now. And then another one in terms of electricity distribution, doesn't mean electric cars are going away, and it doesn't mean energy demand or electricity demand is going away. This is where the market sell-off can actually be an incredible opportunity to buy some of this stuff. So now look what's happening. We're getting close to the 200. So once again, I would love to be a buyer around 26, 27 if it gets there, but I need to see something. So it would have to be some kind of a positive reversal here in the momentum. I don't necessarily need for it to clear the 200, but I at least need to see it get back, let's say over this point right here, which is kind of where you see where this low is. You see where all these dots are connected, these four dots. I'd like to see it get over that. Then I'd be much more interested. But I still think, again, a great opportunity. All these things will be great opportunities when the market stops selling off. Now, people say utilities go up when the market goes down. But the problem is that in this case, the yields have gone up. So the utilities, which are yield sensitive, have also gone down. So would we see any kind of great sign here? Well, if the market is going to reverse itself where people are flying into safety of utilities, see what I mean by all rules are broken? You can't count on any rule. Utilities go up when the market goes down. Utilities go up when the market goes down because yields usually fall. In this case, the market's going down because yields rise. You got to think of everything as it is currently and not based on some old rule. But the utilities have been in this distribution phase, and they're showing no real signs yet of any kind of leadership. However, the momentum is flattening out. So maybe if we get back over the 200 and this crosses the zero line, what we can say about it is this. What we can say is that I'd be a buyer of this over the 200-day moving average. And who knows, maybe that means that the market and utilities can go up. Utilities are part of electricity demand, or that the yields are finally starting to come down. So I hope that helps you look at the broad picture here with an action plan, things to keep on your radar, and what to do going forward. Thanks so much for watching, and bye for now.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.